Welcome to our module on angel investors. In this session, we'll break down who angel investors are and the role they play in the funding landscape, especially within the African context, and what they look for when deciding to invest. So, who exactly are angel investors? Angel investors are typically high net worth individuals. Think successful entrepreneurs, experienced executives, or even members of the African diaspora, who invest their own money into early-stage ventures. Unlike venture capital funds that manage pooled investor money, angels write checks from their personal accounts. In Africa, these investments usually range from $5,000 to $100,000 or the local currency equivalent. What makes angel investors unique is not just their capital, but the experience and networks they bring along. Many of them have built thriving businesses in industries like agribusiness, fintech, healthcare, or manufacturing. For example, a retired bank CEO in Lagos might invest in a fintech startup, not only to fund it, but also to share critical insights from years of working in the financial sector. Angel investors do more than write checks. They play a vital role in the startup journey. They often provide the first significant equity capital after the family and friends round, stepping in before venture capital firms get involved. If you're running a promising agritech pilot in Kenya or testing a solar-powered kiosk model in Ghana, angels might be your first backers. Beyond funding, they also serve as mentors. They'll guide you on strategy, introduce you to customers or suppliers, help you navigate local regulations, and sometimes even open doors to follow-on investors. In a market where who you know can be just as important as what you offer, this kind of support is invaluable. And because they invest in equity, angels are willing to take more risk than traditional lenders. They don't ask for collateral. Instead, they look for the potential. Can your cocoa processing business in Côte d'Ivoire scale regionally? Can your ride-hailing service in Lagos dominate the market? So why do angel investors matter so much for African SMEs? First, they fill a critical early-stage funding gap. Many countries lack well-developed seed funds, so angels provide the $10,000 to $50,000 needed to get a prototype off the ground or to enter a new market. Second, they bring deep local knowledge. A Ghanaian angel who has built a retail distribution empire can save you months, if not years, of trial and error when launching your product. And third, their presence boosts your credibility. Having a well-known angel on your cap table can attract institutional investors and development partners down the line. In short, angel investors provide capital, mentorship, and valuable networks. They're flexible, entrepreneurial, and often deeply committed to seeing you succeed. Now that we understand who they are and what they do, let's examine what angel investors typically look for when evaluating a startup or SME. Every angel investor is different, but there are a few common factors they almost always look for, especially when investing across African markets. First, they look at the founding team. Angels invest in people more than products. They want to know, do you understand your industry? Do you have the persistence to navigate challenges? Ideally, your team should have complementary skills. Someone focused on product or operations, and another on business development or finance. A solo founder can still raise angel capital, but a well-rounded team is usually more attractive. Next, angels want to see traction and proof of concept. This doesn't mean millions in revenue. It could be early customer feedback, a successful pilot, or growing user engagement. For instance, a mobile health startup in Kenya might show that 500 people completed teleconsultations in the first quarter. That's traction. They also assess your market opportunity. Is your product solving a problem for just one neighborhood, or does it have national or regional potential? If you're building a fintech solution for informal traders in Lagos, angels want to know if that same problem exists in Accra, Nairobi, or Johannesburg. Then there's the business model. How do you make money? And can you scale it? Whether it's subscriptions, commissions, or service contracts, the model needs to be clear. You also need to show how your margins will improve over time. For example, a Ghanaian e-commerce startup should explain how delivery costs decline as order volumes rise. Angels also look for a clear exit path. Since they invest equity, they want to know how and when they'll get their money back. Common exits in Africa include acquisitions by larger regional companies or second-round funding by bigger investors. If you can sketch out a 5-year roadmap with realistic exit scenarios, that's a plus. Another critical factor is competitive advantage. What makes you different and hard to copy? It may involve exclusive partnerships, unique technology, strong customer relationships, or favorable licensing. In agribusiness, this could be a long-term supply deal with a farmer's co-op. In edtech, it might involve curriculum integration with a national education board. They also evaluate risk, including both regulatory and operational risks. Are you navigating a sector with heavy licensing requirements? Do you understand how to manage risks like currency volatility or unreliable infrastructure? Being upfront about these risks and showing how you'll manage them can actually build trust. Ultimately, some angels are driven by the impact they can make. They want to see not just profits, but purpose. If your business creates jobs, improves access to healthcare, or supports women or youth entrepreneurs, highlight that clearly. For example, if your solar lighting startup helps students in rural areas study at night, quantify that impact. To wrap it up, angel investors look for strong teams, real-world traction, scalable models, large addressable markets, paths to exit, and meaningful differentiation. If you can check those boxes and communicate your story clearly, you'll be in a strong position to attract angel funding and everything that comes with it.